Welcome everyone, and thank you for joining me on today's training webinar. My name is Daniel Reid and I'll be your presenter today. Now, I've been a mortgage broker for the better part of 10 years and I've seen every situation you can imagine and helped so many homeowners and home buyers over the years. But the one area where I felt the most satisfaction and like I was making a real difference has always been the large number of clients that I've helped claw their way out of debt, save them from losing their home and help them get back on track. So today we're going to focus on how you can eliminate multiple repayments, own your home in as little as 7 to 10 years, and free up your cash flow to live a stress-free life. Even if you think your debt levels are too high, or you're behind on repayments, or you just don't know where to start. Now, can I ask that everyone please type ready in the chat window now if you're here and ready to get started. Excellent. Okay, looks like most of us are here now. Now we're going to be here for about half an hour or so today, and we'll try and squeeze in some questions at the end. We do have a lot to get through, and I trust you'll get some great value. And if you do stick around to the end, I do have some free resources that I'll cover off in a moment. But of course, before we get started, we do need to advise you that all the information here today is general in nature, does not take into account your personal circumstances, and that you should always seek personalised advice before making any decisions. Any results discussed are specific to the examples used, and naturally, of course, your results will likely be different. So, with that out of the way, let's get into the webinar. So why are we here today? Well, today I have 3 goals. So the first goal is to show you how to eliminate multiple repayments so that you can have one simple low interest repayment each month. So rather than having a home loan repayment, a high interest personal loan, car loans, credit cards that never seem to reduce even though you're paying the minimum each month, and a string of other debts that just never seem to end, that you can instead have one easy to manage low interest repayment. And even if you feel your finances are too messy and you don't think you'll qualify. My second goal is to show you how to break away from the typical 25 to 30 year mortgage trap and use this strategy to own your home in as little as 7 to 10 years from now. All without giving up your lifestyle, destroying your monthly budget or waiting for that next pay raise. Even if you think your budget's too hard to manage, we can still help. And lastly, I'm going to impart the knowledge with you and the skill set that you need to make sure you don't fall behind again. So we'll show you how to set up your plan B on autopilot and how to make sure you've always got a backup plan in case things don't go as expected. Or even if you just need some funds for a holiday or whatever it might be that you're planning. Now, I'm sure you'd all agree that the faster you can clear out your mortgage and stop living on the bank's money, the faster you can start working towards your real goals in life and feel like you're getting somewhere. Now, just because the bank gives you 30 years to pay out your mortgage, as you know, doesn't mean you have to play by their rules and on their terms. So by the end of the webinar, you'll know what you need to do to eliminate bad debt. You'll have a plan in place to own your home sooner and be confident you can get by even when times are tough. And if you do stick around to the end, I have a few free resources that I think you'll get some great value from. So firstly, we'll provide you with a free copy of our mortgage reduction guide. It's called 10 Ways to Shave 10 Years Off Your Mortgage. And there's some great stuff in there and some great strategies as well. You'll also get access to a free property value report. And the purpose of this is just to determine what your home might be worth. It's a free report that you get a copy of, so you'll know what your home might be worth in today's market. We'll also give you some information on how you can access a no-win, no-fee debt mediation service to reduce how much you owe on any outstanding debts you may have. So this is for any overdue bills or debts you may have, they can help out. Plus, we'll show you how you can get assistance now to set up your debt reduction strategy at no cost to you. Now, for some people, each week that passes can represent a missed opportunity of sometimes hundreds, sometimes even thousands of dollars per month in unnecessary fees and interest and repayments when you measure it across their mortgage, their credit cards, car loans, debt, personal loans, and everything else they've got going on. So let's just cover off quickly on what the underlying issues may be. Now, I speak to so many clients every day that have gone through major life events that have completely wiped them out and they just can't seem to catch a break. They don't teach this stuff in school. They don't teach you how to be financially stable or how to set up a plan B for when things go wrong. They don't teach you about the importance of buying a new home, or about how to actually pay it off quickly, rather than following a 30-year mortgage term. They don't teach you how to save and invest your money, or how to avoid paying high fees and interest, or keep yourself out of debt. And they certainly don't teach you how to pull yourself out of a marriage breakdown, a major job loss, protect yourself financially from serious illness or any other major life event that can happen to anyone, anytime, without warning and without any form of preparation. I've learnt that it's so easy to go from a zero debt position to an uncontrollably high debt position. Even if you started out in a pretty good place to begin with, it can happen to anyone. So one thing you may have realised by now is that modern society does run on credit, and we're all led to believe that there's no other way to perhaps buy a car, or if we need to buy a new fridge, we must take it out over 12 months interest-free, which you may have learnt the hard way by now. It's not really interest-free. There's so many fees and high interest built into it later on that it just offsets the savings that you might get. And you also, you have to pay a higher price for the goods as well to get that interest-free deal. If you ask them what the cash price is, as you probably know, you get a much better deal. And so all you can ever do is just get by making the minimum repayments each month without making any real dent in any one of your debts. Think about it. The moment that you open up a new bank account, you send offer after offer to take out a new credit card, a personal loan, a car loan, the list goes on. So if you're not doing as well as you hoped, or you're not where you thought you'd be in life by now, then don't be too hard on yourself. All this time the deck has been stacked against you, and now it's time to restructure things, to take back control and find a better way to manage your finances and live life on your terms, not the bank's. So what is the solution? Well, that's a two-part answer. The first part is, what do we do to create more cash flow? To live our lives, pay down debt faster, and to get ourselves out of the current financial position where perhaps we're working so hard, we're on decent income and still stressing over money every day. In some cases barely meeting our repayments, or even at risk of losing the home. So what do we do to get ourselves back on track and into a more comfortable lifestyle so that we can be happy again? And the second part, of course, is how do we set ourselves up for a successful, stress-free future, become debt-free faster, say goodbye to the bank's mortgage, and own our home sooner and are on our own terms. So let's move on with the first part, eliminating multiple repayments and freeing up your cash flow. So for the sake of today's webinar, I'm going to use a common example that I see every day and make some general assumptions. So let's assume that you have a mortgage, some credit card debt, and perhaps a car loan, and some personal loans as well, perhaps even an interest-free store card. You may even have some overdue personal bills, such as large unexpected bills, cancel rates, and so on. The chances are you have some income that goes into your bank account each week, and then after paying all those bills and the mortgages and so on, and your entertainment costs and general living costs, then your bank account naturally decreases down back pretty close to zero by the end of each pay period before you get your next paycheck. And there's a good chance that many of your day-to-day living expenses probably end up on one of the credit cards, which just adds to your debt each month. Now you may have some equity in your home, possibly a car or two, which you may or may not own outright, as well as some basic home contents and perhaps even a small amount in superannuation, but not too many other assets. So from my experience, that's what most people's financial position looks like these days. And if that's close or similar to your own circumstances, then you're not alone and you've certainly come to the right place. Most people tend to just accept this for what it is and get on with life, only to be in a very similar position in 10, 20, sometimes even 30 years later, which really isn't where you want to be. In fact, there's a good chance that if you stay on the same path that led you here today, you'll still owe around about the same that you originally borrowed, possibly even more. But of course, what if you had just a little bit more surplus money each week so that you can start to get on top of all your debts and perhaps even enjoy life again without stressing over money? Or what if you had some savings to take the kids on a holiday, to complete those essential home renovations that you've been putting off for so long because you just didn't have the money to do it? And what if you had a strategy in place that will allow you to own your home in as little as 7 to 10 years? So if you'd love to achieve a similar outcome to this, then type debt-free in the chat window. Thanks Kim, James, Kwok. Susie says it would be a huge relief. Anna doesn't think it's possible, but says she wants to know how. Okay, we'll get to that. Thanks everyone. Keep the comments coming in. Now I'm sure you've thought to yourself countless times how much easier life would be if you didn't have all these ongoing repayments taking up all your disposable income whilst you're working so hard at your day job just to scrape by covering the minimum each month. So it can become very common to feel that unless you somehow get lucky in Thursday night's Powerball, and there's been some pretty big jackpots lately, somehow manage to get a huge pay rise at work, or that something else might change, then nothing's ever going to change, and you'll always be on the back foot financially and always struggling to get ahead. I see the same story unfolding every day with all the new inquiries that we receive, and there just has to be a better way to do things, right? Well, the good news, there absolutely is a much better way to do things, and that's why we're here today. So let's crunch some numbers and look at an example. So here's an example of what many homeowners' debt positions might look like. So as you can see, they have a home loan, a few credit cards, a store card, and some other personal debts. Everything is on a different loan term, at a different interest rate, with monthly fees and a large combined overall repayment. Some rates are as high as 20 or 30%, and the monthly fees alone are pretty significant. I mean, think about how many hours you'd have to work each month at your current pay rate just to cover all those fees and those high interest repayments. Things like credit cards may never actually get paid off. Now, looking back to when you bought your home, you likely put in some form of deposit, right? Well, as you may already know, this is referred to as your equity. So if you've been paying down the loan or your property has increased in value, then as you know, naturally your equity has increased. And you may also be aware that some lenders will actually allow you to access the equity you've got on your property for any worthwhile purpose. So in this situation, we're going to use that equity that you have in your home to pay out and clear either all or at least some of your debt, hopefully most of them. By doing this, as you'll see in the new example, you'll more than likely benefit from a single and much lower repayment. Plus, you'll now be paying home loan interest rates across everything, and all those monthly account keeping fees are all but gone. So in the original example, this person had over $5,500 in combined repayments each month. Now, many of us would consider ourselves lucky if we even take that kind of money home in after-tax income. And so it's all gone before it even hits your account. Now, after you've consolidated those debts, the repayments have dropped dramatically, down to well under $2,500 a month. And all those monthly fees have all but gone. The projected monthly savings are over $3,000 a month in this case. And we haven't even extended the loan term of the mortgage. So this is achieved simply by rolling everything into one easy to manage repayment and using that same much lower mortgage interest rate. And look, I know what you're probably thinking right now, but if I pay off those smaller debts over 20 or 30 years, won't that mean I pay more interest than I initially would have? And yes, you're spot on. One thing you'll notice is that I've actually quarantined the smaller personal debts into a separate home loan account so that it's not mixed with your main home loan account. Now, you don't have to do that, but that's how I like to do it. Now, of course, if all you did was refinance your debts and created some extra cash flow, you may in fact pay more interest over 20 or 30 year period. And depending on your circumstances and your goals and what you're trying to achieve, that may be okay for you. After all, you've now freed up your cash flow for other things. And if all that does is increase your quality of life and make you happy, then at least you've achieved something that you set out to do. But we'll come back to that in a moment and come back to how you can clear out your mortgage a bit faster. After all, the goal here of today is not just to get back on track financially, but to make some meaningful change and own your home sooner. Now, my experience has shown me that for those that don't consolidate, more often than not, those credit cards are still at the same, if not higher levels. The mortgage hasn't actually decreased. If anything, it's gone up. And there are new car loans and personal loans. In many cases, 10 or 20 years later, the debt levels have usually increased. But as I mentioned earlier, consolidating your debts at mortgage interest rates is only the first step. And like I said, if that's all you want to do, that's okay. You'll still achieve some great results. But this is where the real magic starts to happen. As we saw earlier, the savings in the example were over $3,000 a month. So what happens if we take that $3,000 a month in savings and put that into further debt reduction? In fact, let's just get conservative for a moment and assume that Perhaps your savings aren't that high, or perhaps you just want to keep some of those funds so you can live life a little more comfortably, or perhaps start investing in something, shares or property or whatever your wealth creation vehicle might be. So let's put just half. So let's put $1,500 per month extra on the mortgage. Now, we'll likely put this on the debt consolidation portion first, as you really want to knock that off as quickly as possible so that you do in fact save money and reap the rewards of doing this exercise in the first place. So by putting that extra $1,500 each month on the mortgage, in this example, you could potentially save 10 years off the 20-year remaining mortgage, which means you'll own your home in just 10 years from now. Now, perhaps that sounds too good to be true, but now you've gone from a debt level that seems to be getting out of control and will probably look very similar in 10 or 20 years' time from now to being debt-free in just 10 years. Now, of course, for some people it might be a 5-year plan, for some it might be a 20-year plan, and there's always going to be future obstacles and distractions and things that need to be readjusted as you go. But just imagine that for a moment. If you could be completely debt-free in 10 years from now, wouldn't that be worthwhile considering? Wouldn't that be worthwhile at least trying to achieve? And just a quick side note here, if you did decide to put that full $3,000 a month savings from the example, then all debts would be cleared out in just 7 years. Now I'm going to give you a second to think about that, and if you'd like to achieve these kind of results, just type results in the chat window. Okay, great. We've got a few coming in. Cody says he reckons he could save at least $1,000 a month. Brad wants to pay out everything in 10 years from now, and Kim's keen to get started. So keep those comments coming in. Of course, as I said, everyone's situation is completely different. So that's where working out a strategy completely customized to you is the most important piece of the puzzle. And we'll give you some more information a little later on how you can set up your own strategy, or how you can seek our assistance to help you set up a strategy. Now I'm just going to pause there for a moment before we get into the second part and possibly the most important part of the solution. At this stage, if you've already decided that you're ready and that you want to take the next step and you'd like to work with one of our mortgage advisors, we can take you through the process step by step. We can help you find the right structure, sift through all the different lenders and options and do all the heavy lifting for you, then you can jump ahead now and book a call back in our calendar. During the session, we'll be able to answer any questions that you may have and get to know your unique circumstances a little better. And from there, we can devise a plan to help you get started. And then, of course, you can decide if you want to take what you learn on the call and implement it on your own, or if you'd like to engage us to do it all for you. But, of course, moving along with the second part of the solution. So now you know it's possible to restructure your finances to make them work for you so you can stop stressing over money. So what is the second part of the solution? How do we set ourselves up for a stress-free future, clear out our debts much faster, and own our home sooner? And at the same time, put a plan B in place and create some wealth, to live the life that you've always dreamed of. It may seem obvious once I say this out loud, but if you don't see the money in your account, you're likely not tempted to spend it on things that you don't really need. It seems pretty simple, right? Do you really need Uber Eats twice a week for dinner? Or can you cook up something in less time for less money that's probably more healthy anyway? Just little things like that. Paying things on the bank's terms is always going to slow you down from achieving your goals, and using credit cards for everyday purchases and general living expenses with the intention that you'd pay it off at the end of the month doesn't always work out as planned. It happens to all of us. Once you get that bill, the $3,000 or $4,000 credit card bill at the end of the month, but you also want to go out and buy a new car, or perhaps you want to go on a holiday, or something else that seems a bit more important pops up, then suddenly that credit card bill gets put off until next month. But of course, next month you've now got another bill, and so the bill's now $6,000 or $7,000 or $8,000, and you're having to find a way to pay it off with money that you don't have now, and hence the credit card trap that seems to catch even the best of budgeters at least once or twice in their life. Now, don't get me wrong, I do totally understand the world runs on credit, and it's pretty hard to get by these days without the ability to pay for things on a credit card. So there's a couple of ways to manage that, and I'll keep this brief as you probably already know this stuff, but it's good just to bring it up. So, option one, just have a very small limit. something that you can easily pay off in a month, even if times are tough. So, for example, for some that might be, $500. For others, it might be $1,000 or $2,000. So you can easily clear that out in a month. The second option, and probably the perhaps better option, is to just use Visa or Master debit cards. Most banks offer these days, so you can use your everyday transaction account with all the features and benefits of a credit card, but of course without the bill at the end of the month. So by doing this, you'll ensure you don't start going backwards again, and you'll always have access to any, just going back to our savings before that we're speaking about, you'll always have access to any redraw or savings from your consolidation for the bigger items. So now that we've cleared up everything and put you back on track, there has to be a better way to do things in future to ensure you don't end up right back where you started, right? Well, the secret doesn't have anything to do with having a high income or lots of money or being a fantastic budgeter or anything like that. In fact, I'll even admit myself that I'm pretty bad when it comes to my own budgeting and limiting my spend. I'm usually happy to spend what I see in my bank account because I know there's more coming in soon. So the secret really lies in understanding how and why people spend money in the first place. And as I mentioned earlier, the concept of out of sight, out of mind works really well when it comes to our spending habits. If we know we've got $1,000 in the bank to get us through the next week, then we're almost giving ourselves permission to go and spend $1,000 this week. And likewise, if we have a $5,000 limit on our credit card, then our brain's almost telling us that we can go out and spend some money. We can go on a holiday to Bali, or we can buy whatever we want now because we know we can pay it back later, which, as you may have learnt by now, doesn't always work out that way. So moving on with the plan B that I mentioned earlier, what am I referring to when I say that? Well, it's essentially your safety net. Where you go when things don't go to plan, or you need to do something outside of your normal budget or strategy. We can even include things like holidays, big ticket purchases, and so on in our plan B. So that way you don't have to go and finance these things in the future and end up right back where you started, because that's the last thing we want to see. So let's just say your car's blown up, you need a new engine, you've lost your job and you're out of work for a couple of months. Perhaps you've got a family emergency you need to travel to, or any other number of things that can happen. How are you going to cover those costs if you haven't got money in your bank account without borrowing it? After all, you're now putting most of your spare cash into probably some form of debt reduction strategy that's hopefully working really well for you. Well, there's a number of ways to achieve that. So I'll cover just 3 today, and you can combine them in whatever combination you like to suit your own strategy. But there, of course, are other ways to manage things. Option 1 being your mortgage redraw. So going back to those extra repayments that we spoke about in the refinance example. So that extra, say, $1,500 or $3,000 each month, that now sits in your redraw. So you can access these funds just like regular savings if you ever need it. Now, of course, this can go into an offset account if you prefer. So offset account and redraw have a very similar functionality, and we can go into that in a bit more detail with you one-on-one. This, of course, does require a little bit of discipline because it can be very tempting to take out money for things that you don't need. But I find that if it's sitting in your mortgage redraw and not your everyday bank account or even your savings account, you're usually far less tempted to take it out because you're going backwards when you do take it out. So in most cases, you'll only take it out if it's absolutely necessary. The second safety net is your savings. Now, in our example, there was over $3,000 a month in savings after the consolidation. So some of those funds should go into your debt reduction, as we've discussed, but some of them should also go into some form of savings so that you can take a guilt-free holiday, or you can buy a new TV, or whatever you need to in the future without putting it back on your credit card again. So this will be a completely separate account that you don't touch or even look at. Perhaps if you think you might be tempted to spend it, perhaps even pick a different bank from your everyday transaction account so that when you log into your internet banking, you don't see your savings and therefore there's no temptation. And the third avenue is investing. So as with savings and debt reduction, you may want to consider if putting some of those savings into investments is a good idea. And that could be, depending on what you want, that could be shares, it could be property, it could be any number of personal investments. Me personally, I've opted for a mix of some investment property and some high dividend shares. So those high dividend shares pay me a share of the profit each quarter. So I'm getting income coming in from that, which I then just put back into more shares. So there's heaps of options out there, and there's plenty of people you can talk to get some advice on that, and we can all support you in the right direction if you need some help. So moving on, I really believe that automating everything is the key. In order for any strategy to work effectively, we really need to remove as many hurdles and steps as we can and remove the element of ongoing decision making and automate as much as we can. So what do I mean by this? Well, the same way that if you see money in your bank account, you may be tempted to spend it. If you have to go and manually make extra payments each week, you may decide to miss this week and make it up next week, or just get busy and forget. So by automating everything, it takes all that decision making out of your hands and out of your head. That decision making has already been done when doing your initial strategy session and budget planning. Now, of course, you can automate everything from your employer deducting those extra home loan repayments, or even your savings from your wages before it even hits your bank account, automating your everyday bank account through to automating savings and even investing to some degree. Now, the bottom line is if you don't see those funds in your everyday bank account, you simply won't be tempted to spend it, and you'll be surprised at just how much easier it can be to adjust to having less money in your account each week. Although after you've consolidated, you should find that you have far more spare cash available left in your bank account each pay period anyway. So that's really the goal here today. So just to summarize, in order for your strategy to be effective, it really needs to be out of sight, out of mind, and automated as much as possible. Now, we're getting towards the end of the webinar at this point, with just a few last points to cover off. But at this stage, if you've already made the decision that you're ready to take the next step and that you would like to work with one of our mortgage advisors and have them take you through the process step by step, help you find the right structure for you, sift through all the different lenders and do all the heavy lifting for you, then you can jump right ahead now and book a strategy session through our online calendar. During the strategy session, we'll be able to answer any questions that you may have and get to know your unique circumstances a little better. From there, we'll be able to come up with a plan to get you started, and then from there you can decide if you want to take what you've learned and implement it on your own, or if you want to engage us to do it all for you. Now, before we wrap up, I just want to tell you about two of our recent successful outcomes. So let's take Fiona and Kim, for example. They were behind on their home loan repayments, multiple personal loans, credit cards, an array of other overdue bills, business loans, and even the cancel rates and so on. And so thinking that all was lost, they continued just to fall behind further and further. And they were ready to throw in the towel and call it a day. But more than anything, they just wanted to get ahead of their debts and have the creditors stop calling them every time they had an overdue payment, which for them was most weeks. They were both working, making okay money, doing the right things, but they just couldn't seem to get on top of it all. And they'd had a personal life event that led to the situation they were in. I won't go into too much detail on that, but it was a health reason. And so they did get behind, and they just found it very hard to catch up. You know, they tried refinancing, consolidating, getting extensions on their home loans, anything they can do just to keep afloat for another month, but just didn't have any luck. No one would help them out. So how did we help? Well, we were able to secure a lender that would use the equity in their home and consolidate all their loans, their overdue accounts, their business loans, their cancel rates, and everything. So they've now cleared up all their back payments, they paid out all their loans, they closed down all their credit cards, and even paid their overdue cancel rates and everything else in between. And so they could move on with their life again without stressing over money and without fear of answering the phone. From memory, they went from about $3,500 a month in repayments, which doesn't seem too high, but I guess their incomes weren't high enough to cover that and the living expenses. Plus, they had quite a big backlog of repayments to catch up on. By the end of it, they were down to just $1,900 a month, or about $2,000 a month. You know, so not only did they increase their cash flow by about $1,500 per month after the consolidation was completed, but they no longer had any overdue debts or any threatening phone calls anymore. So to them, it was a great outcome. Or how about Maggie and Anthony as another example? When I met Maggie and Anthony, they were struggling to make headway on their mortgage Things were ticking along, paying the minimum each month and just getting by. I remember them saying to me, Daniel, we're making okay money, we're not struggling, but we're just not seeing a dent in our mortgage. What's going on? We want to own our home sooner so we can retire. And although having multiple different debts and repayments, they hadn't defaulted on a single one, they'd never missed a payment, and they had excellent credit history and credit scores. They could see many of their friends, family, co-workers and all the rest paying off their debts and owning their home, but they just couldn't quite figure out how to do it and how to get on top of it all. So we had a chat, we discussed where the issues appeared to be, how to overcome them, and we came up with a strategy. And so what was the outcome? Well, we managed to restructure their debts and their mortgage, save them $465 a month and over $145,000 in interest, and put them on the path to reducing their mortgage faster. So now they've got a bit more money to live on, more money to pay down the mortgage faster, and a clear plan for the future. And so they're a lot happier now. So these are the kinds of stories that make my job so rewarding, and I really hope to see a similar result for everyone here today. Now, just a quick show of hands here. If you've ever experienced something similar to any of these examples, just type the letter I in the chat window. Okay, so there's a few rolling in. Looks like Tim, you've mentioned you're almost considering going bankrupt. Hopefully that's something that we can help you with, help you avoid that. Candace said that she was about to sell the house. So I'd suggest, before you do that, let's just have a look at getting perhaps a bank valuation and see if there's enough equity in there to pay out any of those debts that you've got. But keep them coming in, guys, and we'll chat a bit more about it later if you like. So let's move on. So we've covered off a lot on the benefits and the reasons why you may want to consolidate your debts into one easy to manage low interest repayment. So what are some of the most common reasons that hold most homeowners back from making these changes? Well, many homeowners I speak with often believe they're just too far behind and believe that no bank will consider them, or perhaps they've tried and been declined elsewhere. Or I think it's all just too stressful to think about and don't have the time. Now, I can completely relate to that because let's be honest, if one bank has already said no or if you're behind in repayments, what bank would ever consider you, right? And so once you've got someone that can take care of all this for you, gives you a strategy, walk you through how to do it all, then that's one big weight off your shoulders. I find one of the biggest roadblocks is that we often think that to make change, we have to have this huge plan in place that requires massive change today or nothing will ever happen, when in fact it's quite the opposite. Of course, making big changes will give you big results, but it also makes it far harder and almost impossible to achieve. So what we do need to do is come up with some simple and easy to follow steps that we can implement straight away without having to change your entire lifestyle. It can be so easy to feel like you just have too many repayments going on and not enough income coming in to cover everything, so you just can't make a dent in any of it. And so that's why the idea of consolidating your debts into one repayment becomes so vital. It's a small change you can make today that reduces the stress on your finances and gives you a chance to get ahead of things. The other major roadblock that I come across pretty often is either not knowing what your home is worth or even if there's enough equity in your property for a consolidation, especially with the way the market's been over the last few years. In a lot of areas, property's gone backwards. Hopefully you're not in that boat, but if you are, we still have options available. So fortunately, that's an easy one that we can solve. We've got access to banks that allow us to order a full bank valuation on your home. So that means that before doing all the paperwork and running around and doing your application and impacting on your credit score, and getting your hopes up and all the rest, we can actually get your home valued by a licensed valuer and find out exactly how much equity you've got available to use to consolidate your debts. And the best part is that in most cases, we can get these valuations at no cost to you. Not always, but in a lot of cases we can. So if you're looking for ways to free up your cash flow, or if you're currently struggling with your finances, behind on repayments, or even perhaps at risk of losing your home, then taking up our offer for your free strategy session really is a great opportunity to get some clarity before you make any big decisions. And so whether you seek our help or decide to do it on your own, I would certainly urge you to get moving as soon as possible, as the quicker you take action and get on top of things, the better the chances are of not just getting your application approved, but also the better the chances are of having far more lenders to choose from, which at the end of the day leads to a far better range of offers and lower interest rates and so on. And whilst we can almost always find a solution for even the most extreme of circumstances, the longer you leave it to take action, the harder it can become. Okay, well, thanks for sticking around with me to the end, and there you have it. That is the way which you can eliminate multiple repayments, free up your cash flow, live a stress-free life, reduce your debt faster, and own your home sooner. Now, at this stage, you may have come to the conclusion that you've really got two options moving forward. The first is to take what you've learned here today, jump on Google, sift through all the different lenders and offers and the credit policies, and try to determine which lender is most likely to give you an approval, and seek to do that in your own time. Now, look, if that is your choice, I wish you the best of luck. But may I just give you a quick word of caution? Every lender is very different, not just with their lending policies, but how they actually assess an applicant in the first place and what kind of client they're looking for. And so very commonly, any one lender doesn't usually have the product range or credit policy that covers everyone. In fact, most lenders I find will often take your application without even pre-qualifying you before they get started, which of course can lead to weeks of stress and worry about your approval, getting valuations done and employment checks and so on, only to find out that you never actually qualified in the first place. All of that could have been avoided, of course, if they just did some basic pre-qualification in the first place to make sure your circumstances align with their policy. So that's option number one. And if you are confident and you have the time, then good luck. Don't let me hold you back. Go for it. But what's option number two? Well, that's where we work with you one-on-one and walk you through the whole process of working out a strategy up front that works for you, selecting a lender with a high chance of success, with a structure that helps you achieve your goals and on your terms, helping you to complete all the paperwork and put all the right information together that's required to get your loan submitted, assessed and approved, so that you can spend your free time doing whatever you want with your friends and family and whatever makes you happy. And one of the biggest benefits of working with our team is our ability to vet your details against multiple lender policies, rates, fees and their appetite for lending, and determine which lenders are likely to approve your application. So with this one inquiry, you have access to so many different lenders that they're all kind of pre-vetted for you. But of course, whichever way you decide to go, either going it alone or seeking our assistance, one thing is for sure, and that's it's always going to be a safer bet and an easier path, seeking the help of an expert that does this day in, day out and has a good track record of getting results. But like I said, whatever you do, make sure you do something today, and please don't let it sit on the back burner and get worse. So click on the link now, jump in our calendar and book your free strategy session. For those that joined us here today, we're waiving our $550 strategy planning fees. So that's what we usually charge for strategy planning, but we're waiving that for anyone that joined us here today. So you'll get our assistance at no cost, and of course our sessions are obligation free as well. So you can decide if you wish to take what you learnt on the call and do it on your own, or you can get us to do it all for you. Now, as promised, for those that stuck around to the end, we have some bonuses for you. Rest assured that if you book an appointment through the calendar, then these will be emailed to you. But if you just want to access that information without booking an appointment, then just visit youronlinemortgagebroker.com.au/webinar free, as one word, webinar free as one word. So there you'll be able to download a free copy of the Mortgage Reduction Guide, 10 ways to shave 10 years off your mortgage. You can enter in your home address and claim your free property value report, so you can find out what your home might be worth. You can find more information on the no-win, no-fee debt mediation service, and you'll be able to claim your free strategy session as well if you want to. Now, we're running a bit short on time, so I'll just quickly answer a couple of questions at random and then we'll close out today's webinar. So just give me a quick minute. I'm just going to go through the chat log very quickly and find a couple. All right, so we've got one from James. So he's just asking, will this impact on my credit score? Well, the short answer to that is no, not at this stage. All we're doing in the early stages is reviewing your circumstances, which might include finding out your credit score, but anything that we do prior to an application being lodged doesn't have any impact on your credit score and doesn't leave any marks on your credit file. Now, obviously, if you do decide to do an application either with us or through your own channels at some point, that may, but anything up until the application point should not. But certainly, if you're speaking to a lender direct, just bear in mind that they may have a different strategy, a different process they follow than us. Okay, so one more before we sign off for the day. So Karen has asked, what rates will I get if I have a default? Well, that's a great question, and that can really depend on a number of things. So there are plenty of lenders that can work with defaults. You know, if they're just minor telco defaults and sort of small things, then some of the major banks can still look at them, and so you'd end up with standard rates, just the same stuff you see advertised everywhere. But for the more severe situations, it all comes down to the overall profile. You know, they're kind of like a rate for risk kind of lender. So they'll usually want to know what happened for the default to occur, when it was discovered, when it was paid, what steps are in place to prevent it from happening again, and so on. So the more information and the more of a backstory we can provide makes all the difference. So it's important to, if you're chatting with us, discuss that with us and let us know the full picture. You know, and in the event that we do have to seek out a lender that might have higher rates and so on, then we usually use this as a temporary solution. And so what I mean by that is we use that as a way to fix the current problem, and then in say, 12 months down the track, once you've got a good history of repayments and everything's back up to speed and everything's clear, then we look to refinance you back to a traditional lender. So with any luck, it's only temporary, and we usually get you back to the mainstream lenders pretty quickly. And more often than not, you're still far better off anyway, even with the higher rates, as the combined repayment's usually lower than what it was initially, and you've solved your problem. You've kept your home, or you've got the creditors off your back, or whatever the problem might be. And then again, we just look to flick you back to a normal lender in the future. Okay, so there's a few more questions coming in. So I do apologise that we couldn't get to all of them today, but we're a little over time. So please do book in for one of our strategy sessions, and we can go through in more detail with you one-on-one and talk more specifically about your own circumstances. But look, that brings today's webinar to a close. So let me encourage you again to take up our risk-free offer and book in your free strategy session so that we can help you take back control of your finances and help you create a plan to be debt-free and own your home sooner. After all, that's probably why you're here today. So I'd like to thank you for your time. Thank you for sticking around. I wish you a great day, and I look forward to seeing you achieve your goals very soon. Goodbye.